Hey, taxpayers, it is currently March of 2025, and you know what that means? That's right, spring's right around the corner, the whole COVID lockdown's about to turn 5 years old, and, well, it's also the middle of tax season. So, if you happen to be watching this video, chances are you received a 1099K that looks like this, because, well, that's the whole point of this video, is to talk about 1099Ks. And see, 1099Ks are a little interesting because they're payments received through third-party apps or platforms. And these could be things like PayPal, Venmo, Stripe, and one that I'm seeing quite a bit this season is StubHub. But a question that I inevitably get every year is the amount on your 1099K taxable? And the reality is, well, spoiler alert, you can probably look at the link to this video and determine that it's not a very simple answer because it depends. So yeah, if you receive a 1099K, you very well may or may not pay tax on any of it. And if you do pay tax, it may be different types of tax. So it really depends on exactly your situation and, well, the whole fact that you received a 1099K in the first place is going to be unique to your situation because some people are going to pay tax on it, some are not. And, well, that's why the whole point of this video is to break down specific examples to help you kind of understand what to do with it. Now, something that you do need to realize is even if you receive a 1099K and you find out that it's not taxable, you still have to report it because just to know that even though something is reported does not necessarily mean it's taxed. Because here's a situation. Let's say you receive a 1099K for $10,000, but you look at this video and you realize, okay, I'm not going to be taxed on it. So you don't report it. What's going to happen is that the IRS catches that, they're going to see that, oh, so-and-so filed, a tax return that's omitting that $10,000 of 1099K, and, well, that's not right. So the IRS could send you a letter. But just know that that letter is incorrect because, again, depending on your facts and circumstances, that 1099K that you received may not be taxable. So again, even if it's not taxable, you still have to report it. And I'll get into exactly why because, again, just to know, for everyone out there, just because something is reported does not mean it's taxed. So to put this in perspective, here are some specific situations that your 1099K may be taxed. So for example, it may be not taxed, or it could have some combination of income tax and self-employment tax or capital gains tax. So again, depending on where you fall in this spectrum is, well, how the taxes are going to be handled. But just know that there are more ways than just these. These are just the ways that I specifically see the most of. But again, this is not an all-encompassing list. So to start, what are examples for a 1099K to be not taxable? And usually the biggest ones for these are payments that are going to be received to you that are in the forms of reimbursements. Because at its core, reimbursements are not income. And if it's not income, then it shouldn't be subject to income tax. So for example, let's say you gave your friend, a few $100s and they had the time and, well, they're ready to pay you back. But instead of them paying you cash, they Venmoed it to you. And depending on how much they Venmoed you, and if that's above that, reporting threshold or whatever, you very well could receive again, 1099K from Venmo on that transfer. But again, the amount that you received was considered a reimbursement. If so, then it's not taxable because, again, it's not considered income. Now, to put this in perspective, here's a meme that's been floating around for a while, and it actually illustrates the point very well. So, for example, let's say someone who works in an office building does a one-time order with, a local restaurant or whatever, and maybe, since you're making a big order, maybe there's a discount available or whatnot. Now, whether this is a one-time event or this is like every week, who knows? But what could happen is this is a very real situation where maybe someone in the office is putting in big orders and everyone just Venmos that one staff member as a reimbursement. Now, what could happen over time is that staff member, again, all those Venmo transactions or whatever is going to accumulate throughout the year, and it very well could receive a 1099K. But again, is that income to that staff member in the, this meme example? And the answer is no, it's not income because it's a reimbursement. Now, we just mentioned a couple of minutes ago that I just said, even if you receive a 1099K, you still have to report it. So how do I report something that's a reimbursement so it's not taxable? So personally, what I would do is if I receive reimbursements from a 1099K is, again, we need to report it as income, and then we're going to immediately report it as an adjustment. So again, in the end, we're not paid tax on it. And to do this, you would go to your Schedule 1 on your 1040, and under line 1Z, under other income, just put 1099K, maybe dash reimbursements, just to show that it's not taxable. So again, that amount is going to show up there as an addition to income. However, you're going to do the same adjustment. Again, you're going to negate it out by line 24Z on part 2 of that Schedule 1. and that's going to back it out. Now, what I would do is I would make sure that the titles of of those two lines line up. So again, it would say something like 1099K reimbursement not taxable as again the additional to income, and then just use that same title for the adjustment in line 24C, just so we know that those two line up and that they shouldn't be taxable. So again, reimbursements are not taxable at all, whether they're through a 1099Z or not. So again, if you've got a 1099Z and they are, again, reimbursements, make sure you don't pay tax on them. But another popular example would be things like yard sales. Now, yard sales could be a little tricky because if you are in the business and the profit motive of selling things in order to, well, make a profit, then we may be in this Schedule C, self-employment. But people who usually run yard sales are just trying to get rid of crap in their garage and, whatever. And because of that, people are trying to sell things for, again, whatever they can get out of. So usually they're not making a profit at all, meaning that they bought these items like clothing and toys and whatnot for maybe X dollars, and now they're selling it for X minus, so something less. And if that's the case, then they're not making an income. And if that's the case, which again, usually the vast majority of, again, yard sales I've been to is, again, people are not trying to make an income, they're just trying to get rid of stuff. And if that's the case, again, your 1099K would also not be taxable because, again, you're not making an income. You're not profiting off it. Now, I will give the IRS some credit on this because actually that going back to that Schedule 1 that we just talked about with the reimbursements is actually at the very, very tippy top of that form is going to have a section that's actually for 1099Ks for things that are sold for losses. And if that's your situation, well, then just put the 1099K information up there and you're done. You don't have to add it and then subtract it out because, again, it's not subject to tax because, again, you're not selling for something in order to make a profit. You're just trying to get rid of something and have a little extra spending cash for dinner, I guess. So in the end, if you determine that your 1099K represents reimbursements or things that you sold at a loss, then, well, chances are you're not going to pay tax on it anyway. But again, we did have to report it on those two examples I just gave because we do need to show that we have acknowledged that 1099K, because if we just simply ignore it, like I just mentioned a little bit earlier, the IRS could send a bill for the full amount and plus interest and penalties. And, well, since the IRS's staffing is getting cut, you're going to have to call and try to get it waived, and it's just not going to be a fun scenario. So let's just make sure we do it right the first time so you don't have to go through that entire, call and, fixing step. So the next scenario for your 1099K, whether it be taxable or not, is one that I see personally the most of, and that is things that are regarding self-employment, running your own business, side gigs. And we're talking about, either Schedule C or maybe you have an LLC, but you're the only owner, in this case member. So you, again, still file a Schedule C or whatever. But again, usually this is what I see 1099Ks regarding because, again, they're services or goods for what you're trying to sell for a profit. So going back to the yard sale example, because people that I usually see, hosting yard sales aren't doing it to make a profit. They'll usually do it to earn a little extra cash. But again, cash doesn't necessarily mean income, which, could be a whole nother story. But again, they're just selling things at a loss. Again, they bought it maybe years ago for X dollars, and then they're selling it for like, a tenth of the value that they purchased it for. But what if it was the opposite? What if someone actually is in the business of trying to make incomes through, again, yard sales or Facebook marketplaces or whatnot? Well, that kind of changes things up a little bit. You see, you very well could receive a 1099K for goods or services for which you are intended to make a profit. And if there's a profit motive, then chances are it could be something like self-employment. But again, it really depends on your specific situation. So again, I'm going to speak pretty high level here. But just to kind of put this in perspective, I personally receive a 1099K from Stripe, because that's one of the platforms I use for billing when it comes to consultations. So if I receive a 1099K for, again, consultations, I'm not only subject to income tax, but I'm also going to be subject to some portion of self-employment tax. But am I going to be taxed on the full amount of what my 1099K says? No, because that's one of the benefits of having, being self-employed and having Schedule C and whatnot, because you may very well be able to take deductions against that income. So again, I receive a 1099K for, let's say, $10,000, just to make the math easy. Am I going to be subject to both income tax and self-employment tax on that $10,000? No, because again, I've got expenses that are going to be help generating that level of income. So in this thing, things like software, insurance, and office supplies and equipment, things that I can write off against that in order to not pay as much tax. So even though my 1099K is going to say $10,000, the costs or the write-offs, the deductions to arrive at, again, a net number is, well, fair game. If it's ordinary, necessary for your business, then you can write it off against that level of income in order to arrive at what you're actually going to be taxed on. To put this into another perspective, one of my clients is a painter, and he receives a number of different 1099Ks. But again, the process still remains the same. If we sum up all of his 1099Ks and it comes out to, again, let's say $10,000, is he going to be subject to tax on that full $10,000? No, because there's expenses that go against that $10,000 that help generate that $10,000 level of income. Again, paint, rollers, drop cloths, mileage that he has to drive to specific job sites, that is all deductible against whatever that 1099K is going to be. So again, if your 1099K is regarding self-employment, just know that yes, you do need to report the full value as gross income, but you're also entitled to specific deductions, again, that are ordinary and necessary for that business in order to arrive at what you're actually going to be taxed on. Now, the next scenario that your 1099K may represent is Schedule Ds, and D is used for capital gains. Now, capital gains is whenever you buy something for X dollars and you hold on to it for some sort of, hope and for appreciation, and then you sell it for X plus Y, hopefully. Now, this is what's going to come down to capital gains tax, but now it determines how long you've held on to that asset for. Because if you bought it over a year ago and then you sold it, then you're subject to what's known as long-term capital gains, which actually has a lower tax rate than normal income tax. But likewise, if it's something that you purchased last week or something under a year and then you sold it, then you're going to be subject to the same level of tax rates as, well, just normal W-2 income. So a classic example of this is Pokemon cards, because you know what? I grew up in Generation 1 Pokemon cards. I still have all of mine's, locked up in Nylar and, all the, safety things and all that fun stuff. But if I was to take those and try to sell them, that would be considered, well, capital gains, because I bought them back in the 90s for, I don't really know, but everything that has hopefully appreciated since then, which maybe a little bit, I don't know. I've never had them graded or, appraised or anything. But if I was to sell them for a whole bunch of money, that gap between what I paid for them versus what I got for them is considered capital gains. To put this into another perspective, let's say this little notebook that I have here. Now, this isn't just some ordinary notebook. This one's a special one. I actually bought it from a collector for $1,000 10 years ago. But here's the thing. This is actually George Lucas's original notebook that he wrote the original script for Star Wars in. And I paid $1,000 for it. And I can go to Pawn Stars right now and sell it for $1,500. So again, if I buy this for $1,000 and I sell it for, let's say, $1,500, and again, I'm Venmo'd or PayPal or whatever that $1,500, am I taxed on that full $1,500? No, because my basis, which again is the cost of whatever I used to acquire this in the first place, is going to be, well, in this case, $1,000. So again, if I buy something for $1,000, that's my basis, and then whenever I sell it, that's my proceeds. And again, it's the difference between your proceeds and your basis that's subject to capital gains. And again, if it's something that I held onto for longer than a year, boom, long-term capital gains, which again has lower tax rates. But again, if it's something shorter than a year, so again, someone that's like maybe day trading when it comes to stocks, that day trading, since again, it's normally not going to be held for longer than a year, that tax rate is going to be subject to the same rates as, well, if it was just W-2 income. Now, probably the last situation that you may see your 1099K represent is rental income, because rental income is kind of like a Schedule C, but not so much. Because again, let's say you have whether it's one property or multiple properties. So just know that if your tenants pay you through things like PayPal and Venmo, chances are you are going to get a 1099K. But you're not subject to all the other situations that I just mentioned, because rental income is treated a little bit differently. It's not Schedule C or D, it's Schedule E. And just like the Schedule C example, if you have, again, let's say $10,000 of rent paid through a 1099K, that's going to show up as, well, rental income. But like I was just mentioning a little bit earlier with the Schedule C, Schedule E is pretty similar, because if I receive a 1099K for $10,000 for rental income, am I going to pay tax on that full $10,000? I would hope not, because again, I'm going to have the deductions to go against that. The biggest one probably is going to be something like depreciation, because if you are renting out, you should be taking depreciation, because, well, when you go to sell the property, you got depreciation recapture, which a lot of people in renting don't know about, and it's not a fun conversation to have. So again, you're going to have deductions like depreciation. Also, depending on what your agreement is with tenants regarding utility payments, maybe you have utilities, you're going to have insurance, you're going to have property taxes. All these deductions are going to go against whatever your 1099K is in order to arrive at what you're actually going to be taxed on. So at the end of the day, if you receive a 1099K, is it taxable? Well, I would hope this video would probably explain to you that it really depends on exactly what happened, because sometimes you won't pay any tax. Sometimes you'll be subject to both income and self-employment tax. It all depends on your specific situation and what that 1099K represented to you, because not every person's 1099K, even if it's for the same amount, wasn't meant for the same purpose. And if that's the case, your story is going to be different between the answer I would give this person versus the answer I'm going to give this person. So again, depending on what you receive the 1099K for, is going to be your answer. So hope this helps.